JPMorgan taking First Republic. It's a big deal. It's maybe, hopefully, the end of what has been a crisis of confidence in the banking sector. JPMorgan assuming the deposits and assets from the company. I want to get straight over to Leslie Picker, who's been working all weekend. And what a story it's been with so many different bidders. The FDIC in the middle. And, of course, Janet Yellen. Tell us about it.
Yeah. It's historic. It was a competitive bidding process. This weekend was fast and furious. But yes, the news this morning is that JPMorgan is acquiring First Republic directly from the FDIC, which seized and immediately sold the faltering bank. This transaction, the result of a competitive bidding process, at least according to the FDIC and JPMorgan, includes a majority of First Republic's assets, including $173 billion in loans and $30 billion in securities. Specific terms for First Republic's underwater assets are not quite known yet. We should learn more about that over the course of the next few hours. But the FDIC and JPMorgan entered a loss share agreement where they'll basically share in the losses and potential recoveries from some of First Republic's single-family, residential, and commercial loans it purchased of the former First Republic Bank. And JPMorgan will assume about $92 billion in deposits. That includes the $30 billion in uninsured deposits that were infused into First Republic by itself and other large banks in March in an effort to prevent any contagion effects from the failures of Silicon Valley Bank and Signature Bank. As part of this transaction, JPMorgan intends to repay the deposits from its large banking peers or eliminate them as part of the consolidation. First Republic will go down as the second largest bank failure in U.S. history. That's bigger than Silicon Valley Bank. In a statement out earlier this morning, JPMorgan Chairman and CEO Jamie Dimon said, quote, "Our government invited us and others to step up, and we did. Our financial strength, capabilities, and business model allowed us to develop a bid to execute the transaction in a way to minimize costs to the Deposit Insurance Fund." That FDIC estimates that the cost of that deposit insurance fund will be about $13 billion as a result of this transaction. JPMorgan will not be assuming First Republic's corporate debt or preferred stock. Shares currently trading just under $2 per share in pre-market, so not quite at zero, but they've gone down about 98% so far this year.